Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, you're not going to believe this. My little baby girl, Emily, turned 20 years old. I cannot believe it. I no longer have teenagers. So we made it through the teenagers years. It was a great run, to say the least. She came in town, which was very cool. So that was neat. She has a little fall break and she brought some friends with her. We were able to go out and have a nice dinner. We had some dinners at home. It was just a great celebration. Loved having her around. Jack was able to come in town with his girlfriend, Sydney, and we all just had a great time together. Nicole, of course, is still in Hawaii, doing great there. She'll be home for the holidays, so can't wait to see her. Also, client appreciation parties coming up real quickly here on November 8th. Hopefully you'll all be there. It's going to be a great celebration. A simple way for us to say thank you. Thank you for your trust and confidence. So look forward to opening up our home and having you there. We're going to roll out the red carpet for you. So hope to see you there. Market-wise, well, the markets have moved along quite nicely. As I record this, the S&P 500 and the Dow are both trading at their all-time high. And the NASDAQ's only off about 1% off of its all-time high that it hit back in July. So it's worked its way back up. The equity markets are performing very well. We had some reports come out this last week, and frankly, the consumer is still remaining pretty strong. We're seeing consumer spending still being pretty robust, and that kind of got the market excited that we probably will not slip into a recession, which we've been saying here for a while. We didn't see that on the horizon, but now the numbers are starting to kind of solidify that. But there's now talk that maybe the Fed could pause in November or December at the next FOMC meeting. In other words, maybe they won't lower the rates, the 1/4% that everyone's talking about. We think that they will. They'll probably still lower the rates in November, maybe 1/4%. Of course, they did it 1/2% or 50 basis points during their last meeting. We think that they'll probably lower them again 1/4%, but they can have a little bit more flexibility because the economy still remains very strong. Employment numbers look pretty good, but again, the labor markets have been a bit softer. But overall, it looks like, again, we're hitting that kind of that Goldilocks era where it's not too strong, not too weak. The soft landing looks pretty solid. Inflation is remaining pretty calm. There are some concerns that we could see a tick up in inflation. We did see rates bounce up a little bit. The 10-year Treasury is now over 4%. And so it's kind of hanging out right around that 4% level, which we think is okay. And so the interest rates look pretty solid. They're not spiking up a lot, but they're not dropping a lot. So that's probably a good thing that we're pretty balanced right now. So corporate earnings look good. GDP numbers look good. That's what's driving this market forward. Are we a little too far ahead of ourselves? Perhaps. I think valuations might be a little bit high. I would expect some pullbacks and some corrections, especially in light of some of the things that are going on in the world. We got, of course, an election. We got some geopolitical concerns out there. There's all kinds of things that could happen that could make this market have an excuse to sell off and have some profit taking. So expect the volatility, but boy, things have looked pretty solid. Everything's moving along nicely. The accounts look good. But of course, if you have questions or concerns, of course, you know we're always here for you. Never hesitate to give us a call. Look forward to seeing y'all real soon. The weather's getting nice here in the desert, so come back to the desert and see us. It's beautiful here right now. Take care and God bless. Bye-bye.